investments that falls into these two buckets can be categorized as the best investment for retirement. And when I talk about retirement, I mean long term, because whether you like it or not, you are going to retire one day. Whether you are in a business, have a paid job, you are working for government, you are working for a private entity, whether you like it or not, you are going to retire one day. If you don't retire, your health is going to retire you. Your energy is going to retire you, because a point will come when you will no longer be active. And it is what you have sown, it is what you have invested that will not be speaking for you at that point in time. So when we talk about investment, we are not just talking about investment for talking's sake. It is realizing the facts, coming to the recognition that we have a future, and that future we may not be able to actively work as we are doing now. And that's why we need to plan for it. And when we say planning simply means bringing the future into the present and you doing something about it. So that's the reason for investments. Nobody's growing younger. Everyone is growing older, and you need to prepare towards your old age. You need to plan towards your old age. And it is not every investment that you can deploy for your future. You need to understand that we have short-term investments, we have medium-term investments, we have long-term investment. When we talk about retirement, when we talk about a time when it comes and you can no longer work as you should, we are talking about long-term investments. And in this video, we quickly want to look at these four buckets, but at the end, these two, they are the best for retirement. So let's jump into it. So the first bucket is called the bucket of cash flow. Investment for cash flow. What is investment for cash flow? It means when you invest, let's say 1 million naira, you invest, let's say 1 million naira, at the end, your 1 million naira still remains 1 million naira after 2 years, after 3 years, it remains 1 million naira. But what you'll be collecting from this investment, from this 1 million naira, the interest rate or the return you'll be collecting on it could be quarterly, could be monthly, could be semi-annually, could be annually. That is what we call cash flow. So let's say on this 1 million naira, it is 20% per year. So which means you are going to be collecting 200,000 naira on it, but nothing happens to this 1 million naira, it remains 1 million naira. So that is investing for cash flow. So what you are really interested is in the cash flow that comes in, and people usually like the one that comes frequently. That's why you see people investing in FGM bonds, for instance. FGM bonds comes in every 3 months. So once you invest your 1 million naira in FGM bonds, you get cash flow every 3 months. Treasury bills, if you are investing at least 20%, the 200,000 naira will be given to you at the beginning. It will be given to you at the beginning, so which means 800,000 naira will be deducted from your account, and eventually at the end 1 million naira. But nothing happens to your capital. Your capital does not appreciate in value. So that is what is called investment for cash flow. When you also invest in corporate bonds as well, so many investment that falls under this category, especially the investment we call marketable securities, they fall under cash flow. So you don't deploy this for retirement. No, this is just meant for cash flow, except you want to be replowing it into it. But there are other investments you can use to do that, rather than deploying FGM bonds, treasury bills, or corporate bonds. Don't use it for retirement. Just use it for your short-term investment or medium-term investment. That is what cash flow investment is really meant for. Number 2 is the investment that falls into the capital appreciation buckets, capital appreciation investment buckets, which means when you invest your 1 million at this time, 1 million. When you invest your 1 million this time around, you may not be collecting anything periodically like cash flow. But what happens is, at the end, maybe after 5 years, after 6 years, after 10 years, this 1 million naira could have become maybe 3 million. Depending on the timeline, depending on the time frame, depending on the strategy or the tactics you have decided to deploy. So for instance, if you buy land, let's say land banking, you bought it 1 million naira this year. In the next 5 years, it could be 5 million, it could be 3 million, it could be 2 million naira, depending on the location, depending on several factors that drives the value of land, that drives the value of real estate. So that one is for capital appreciation. You are putting your money there so that your capital can appreciate. And when you buy gold and commodities as well, artifacts, baseball cards, you buy gold, you buy silver, you buy diamond, they appreciate in value over time. Another one is digital assets, which we call normally, the popular one is cryptocurrency. When you buy a token or a coin and you hold it for a while. Just imagine those who bought Bitcoin when it was less than $1, and as at today, as at the time of making this video, it is $65,000 per Bitcoin. Meanwhile, in 2009, it was less than $1. So imagine those who bought them, see what has happened to them. So that is called capital appreciation. You don't collect periodic return. What you have is your capital appreciates in value. And we usually call it capital gain. It is when you now sell that thing you have bought, that thing you have invested in, then you have your money. You have your money. So that is capital appreciation. Now, the question is this good for retirement? Yes, it's good for retirement. It's good that you plan, but it is better you go for this third bucket rather than just doing this. Why can't you just go for this? This is good for retirement, but it's better if you can take a step further and do this. This bucket is called the cash flow and capital appreciation buckets. It means your money, your 1 million naira, is not just 1 million. By the time you retire, your 1 million naira is no longer 1 million naira. It has appreciated and also is giving you cash flow. So it is not like land banking. It is not like gold and commodity that you just sell. At that point in time, it has appreciated in value, but you are still collecting cash flow from it. Let me cite an example. When you buy shares and stocks of a company, the share price increases in value. Let's say you are buying the share of a company, let's say 10 naira per share, and after 20 years, it is now 40 naira per share. That's an appreciation of 30 naira. 30 naira times the number of shares you have bought. That is the capital appreciation side. Now, when you buy shares as well, you collect something called dividend. That one is called cash flow. So till the end, if nothing happens to that company, they didn't file for bankruptcy, you are going to collect dividend till, even when after you have gone, your children will still be collecting the dividend. After you have gone, your children will still be collecting the dividend. It is called cash flow. So dividend is cash flow. Share price appreciation is capital appreciation. So that's why you see the wealthy investing in companies. You see somebody like Femi Otedola using 36 billion to buy First Bank shares. 36 billion just in this year alone. Just in this year, 2024 alone. So you imagine, why are they doing that? It's because of this. They know the advantage of having cash flow and capital appreciation. The major advantage of this is that you will never go broke even in your old age. You don't go broke. Some companies pay dividend twice a year. So it is better you go for this. So you have also rental property. When you have a property, maybe a shopping mall, a shopping complex, multi-tenant property, you let it out. As the property is appreciating in price, especially the land on which the property is, as it is appreciating in value, you are also collecting rental income. So it is better you go for this bucket. Invest in this kind of vehicle. Number 3 is farming. When you have land, so you don't just leave the land fallow. You can decide to engage people so that they can farm for you. So when you sell the produce, it's giving you cash flow. When you sell the produce from the farm, it gives you cash flow. But much more, the capital, the farm also, the land is appreciating in value. So that by the time you retire, you do what? You can sell it off. So what is this last bucket? What is this last bucket? It is called compound interest investments. Compound interest investments. You may say, what is the example? Just ask your banker or your stockbroker that you want an investment that has compound interest effects. Compound interest, yes. And the advantage of this investment is that the earlier you start, the better. The earlier you start, the better. So just ask them, because many of these asset management firms has different options. So that's why I don't want, they have mutual funds that has compound interest effects. So which means it is being rolled over. I will make a separate video, but that will be next week, not this week again. I will make a video on how compound interest works. We call it the eighth wonder of the world. Eighth wonder. It is very good for retirement. So any of these two buckets, you are too good to go. So if you want to know more about compound interest investments, just ask your banker that you want an investment that has compound interest effects. So not all investments is fit for long term, which is for retirement. It is important you pick the one that suits retirement. As much as you are investing for cash flow, as much as you are investing for short term and medium term, much more than that is for you to think about your future. I recommend you watch this next video, which is avoid these types of investments. Till we meet in our next video, stay blessed.